Sticking with the markets and turning to someone who's been known to buy when there is red in the street, Warren Buffett. Buffett releasing his 55th annual shareholder letter over the weekend, opining on a number of things. Stocks versus bonds. He goes stocks. Succession plans. Berkshire stock holdings. And of course, this coming only days before today's sell-off. Buffett also addressing the coronavirus effect. So let's talk about the letter and some of the commentary in here and what jumped out at you in this. I personally find it a good time to have a nice big letter like this to chew on a sell-off day from somebody that provides a lot of perspective. So he in the letter he said the markets could go down 50%. It's only 3%.
It has, right. So we've got 47% points to go. Sure. No, I thought that Lubrizol story that he told in the letter was I'm still thinking about that. So Lubrizol, a company that Berkshire owns, they had a big fire at their plant in Ohio, and guess who the insurance company was? Right. Berkshire Hathaway. And of course, then Buffett goes, as he likes to do, to the Bible, Matthew 6, let not the left hand know what the right hand doeth. So, very interesting, classic kind of Buffettism there. But, Andy, we talked to an analyst earlier from KBW on this, and he somewhat pushed back on my point, but I was struck by the amount of emphasis Buffett placed on the capital returns from owned businesses, equity-owned businesses, to Berkshire Hathaway. In other words, how much the amount of dividends that Apple paid back, that American Express paid back, to Berkshire, to the parent, because he's trying to get shareholders, I think, to not focus so much on the $130 billion in cash that they're not using to buy businesses. He's saying, it's right here, the 15 companies that we're showing on the graphic right now, these are your businesses. This is what we've got. And this notion that they have to go buy an entire company out there, the way they did Precision Castparts 5 years ago, which has been such a focus of the market. I think Buffett's saying it's just not going to happen in this environment.
Yeah, I mean, you're not suggesting obfuscation or anything like that. Not that. But so much as just focus on that, not that. But what's interesting is that, this is not his time, right? Yeah. Today might be his time, but everything up to today has not been Warren Buffett's time. And you get the usual people belly aching and grousing that there's underperformance, and there's been now years of it, and last year it actually accelerated the underperformance. And he's got all this cash, and he should be buying things. Now, this is what happens when the market runs up. It happens every time. When you go back to 99, you go back to 2006. He's got too much money. He's trailing the market. He doesn't know what he's doing. He's lost his touch. Now, things are a little different this time because he's 89 years old. And he does have more money than he's ever had by a long shot. So you've got the tyranny of large numbers working against him. And does he still have the wherewithal to pull it off? But, now, is this an indicator of things to come, and is today the beginning of it?
Right. I think that's the big question here. And the interviews that he gave today on CNBC when he was talking about Apple, just with the letter and the way he expressed his effusion for Apple, but as a company within the portfolio, almost like your Justin Booths or Fruit of the Loom. I think he thinks about them not just as these are, investments that I gave money to somebody and they bought that these are, we should be thinking of him because he says you pay a premium for taking out a whole company. For the elephant could be a big purchase in another tech company.
Amazon.
Google.
Right.
Is it? I don't know. Now there's all sort of regulatory stuff, but could that be what the next move is?
Well, but I think to Andy's point, though, by Buffett trying to emphasize that, he is admitting that this is not his time because the way that Berkshire became what it was, certainly the security selection has been incredible from Buffett over time, but how'd they get all that money? Well, they owned Geico, and Geico gave the float back to the parent, and that is the money you invest. And so you don't get rich just picking stocks, right? You have to own businesses that push cash back to the parent that you can use at your discretion. Now, they get Apple, their basis in Apple comes down when the company buy back stock and pays them a dividend, but it's not cash coming to the parent where Buffett can go do other stuff with it. It's different than the float.
You know what's funny? Have you seen his, and I know you guys both have, his face when he talks about the return of capital and the magic of compounding?
Yeah.
It is joy, right? And it's like, you just do this and then this happens, and it's just so amazing. I think he has joy, takes joy in it in a way that I know I don't. I mean, I like it. Who doesn't?
Yeah.
But it's just
He's
like
pretty darn happy.
it's so different, isn't it?
Back to that KBW note, they
Yeah.
just think the best of the float is over. You know, him continuing to talk about the float, like, great, but look at rates and look at what kind of world we live in right now.
And to that point, another interesting wrinkle in the letter, Ajit Jain, in charge of the insurance operations, Greg Abel in charge of the non-insurance businesses, they're eligible for questions this year. So I think it's on every interested shareholder, certainly the reporters who do the questions, the analysts, there will be questions to the two of them, quite a few, and I think that's really where my interest lies. I know what Buffett's going to say about a bunch of stuff, or I think I know, but we could approximate it. It's like those two guys are really...
There was that quote about being 100% prepared for when Charlie and Warren are not there. That was a kind of big takeaway, and these two guys obviously are going to be the people running it from the operational standpoint, and then Ted and Todd from the investment standpoint.
We've heard a little bit from them before, so not to take the analogy too far, but it's a little bit like Bloomberg at the debate. It's going to be big for the promo.
But you know what? You mean for Ajit and Greg? Well, first of all, Ajit and Greg have answered questions before.
Yes, before, but they've been sitting down there. I just don't know how it's going to be this time.
They'll be just fine.
They're going to be prepped
They won't
very
be,
well. No, I'm just saying the level
I know what you mean.
of scrutiny and expectation that goes into it.
Right.
It's a big deal.
I know, but I'm saying they're going to do better.
Yes,
Than,
yeah. No, I wasn't saying anything about how they're going to do, but just
right.
about somebody making their debut in a normal way.
Yeah, I mean, I think it's about time. I'm glad.
Well, be sure to check out the Berkshire Hathaway annual meeting. It is May 2nd, exclusively on Yahoo Finance.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.